Paul, we're really happy that the markets are higher today.
Yes.
I'm sure you're smiling. But it really all depends, and we keep saying this, it really all depends on which side of the trade you're on. So if you're either shorting the market or if you've gone long, and that really is the name of the game. And we've actually seen some people being burned today because they expected some more negativity.
Yeah, and at times like these, it's very easy after a month and a half of soft to downward markets to build this whole intellectual case about how we're all doomed. There are just so many problems. Europe's not dealing with its problems. The US is not dealing with its problems. Inflation, blah, blah, blah. The next thing you've talked yourself into this major thesis about how markets are going down. And then if you're involved with trading or day trading or even just doing short-term market trading, then you're kind of looking for the bad news and you've built the case and you've gone short the Allsies and then you're waiting for your thesis to come right. And suddenly you get caught in a short squeeze like we saw, overnight now, because one or two items of news appeared to kind of go the other way. So I'm not going to mention names, but I saw somebody on Twitter saying, these are the kind of markets that want me to just give up trading, and then, expletive at the end. But I mean, it's the problem, isn't it? It's trying to understand what's going on, what's going to happen next. These have been tricky markets to trade.
And of course, I mean, especially if you're a day trader, because if you're in it for the long term, you just kind of sit back and you watch the volatility, but you're not really that affected as though you would be if you were making decisions at the top of the day.
Absolutely. I mean, it's easy if you're, long only asset managers like the world I come from, where you're looking for stories, you're looking for parts of the economy which are going to expand more than others, and therefore companies are going to have an easy open road in front of them. And then you're looking for a good management team and a good story. I mean, we were discussing the retail sector today and talking about Woolworths, which looks like it's doing well, Mr. Price and so on. But, that conversation happens without any real reference to price.
Yeah.
Because that, you're going to be buying a company, not just a share price. Trading is about dealing in share prices, whereas long-term investing is about dealing in companies.
Interesting to note, some Italian banks hit limit down today,
yes,
and they therefore were suspended.
I didn't notice that story.
Well, it's fascinating because limit down essentially is around 8 to 10% in Italy. So suspended from trade. Again, this contagion scenario, you're talking about sovereigns not dealing with their problems and not looking at how to really focus on fixing the debt crisis there. Again, I ask you now, looking back at the week, austerity measures implemented, vote of confidence, big yes for George Papandreou. What is your view overall? How's it going to play out, Paul?
Look, I mean, that Greek situation remains tricky because the majority he's got is a slender one. And so people are anxious about stories that there's a bit of shift in the camp and so on and so forth. But there is going to be a weekend or a day in the next, I don't know how long it's going to take, days, weeks, months, where the problem is going to have been perceived to have been solved and everybody's going to stop worrying about that and move on. So my thesis is, don't try and get into the details of what's going to go wrong here because it's not.
Apparently you got into the details of an article by
Yeah, I was loving, thanks for bringing that up actually. It's a story which for me is quite telling, a editorial by Wen Jiabao, the Chinese premier, in the Financial Times. Effectively what he's saying is that China saved the world. In other words, the consumption out of China in this period, the rising demand for physical goods, both luxury goods and basic goods in China, is what's driving a lot of this economic progress that multinationals are making. And I think it's a case well made. And he says that they've dealt with inflation and everything's hunky-dory. The Chinese, everybody, is a bit scared of them. But in some ways, when you look beneath the surface, the Chinese are a whole lot like us. It turns out their favorite food is KFC. They're all obsessed with cars and cell phones. They all want to join the Communist Party. It's just like South Africa.
Well, I mean, do you think that, China, yes, saving the world in a sense, and really everyone was looking to China when the economic crisis came about and looking to the East for East demand. Do you think it's going to be a soft landing, a hard landing? Do you think growth is on a strong path?
I think growth is fine in China, and I think it's going to be followed by all these other countries. Remember the positivity that we used to experience in 2005, 6 and 7 basically went away. But my sense is once the developed world starts resolving some of its problems, then that story is going to be the one we're talking about the most.
Share price drop, a significant drop that came through for Simmers, and of course because the deal came through with Village Reef, we know that Simmers on the day of the announcement dropped around 95%, but purely because there was an impact on the share price given the acquisition.
I mean, for me, it's the story of the week because, we were laughing in the office. Look, the Simmers thing specifically, Village Main bought the business out of Simmers, so Simmers becomes like a cash shell. So, that's how that sort of thing mixed. But the value is returned to the Simmers shareholders in the form of village shares. So I guess, one can, explain the transaction. But the really funny thing for me about it was Bernard Swanepoel, who's the guy that controls Village, is why would he go back into the mining business? He made a fortune back in 2001, 2 and 3 with Harmony doing so well. So, like now to go back and buy Buffels and acid mine drainage and labour, it's totally baffling me. I can't understand why would you do that.
Dart, please.
We have time for a dart.
Yes,
wow.
very quickly.
I'm going to give you this one that's
the
off-centre.
one. Why would you do that? That's not going to go properly.
Okay, it's just nailed here. Growth Point. Quite a good stock, I reckon.
Yeah.
Good, nice, boring one for the weekend.
I need a little bit more information. You obviously clearly don't know enough about Growth Point.
No, I mean, it's a fabulous stock. They just bought the waterfront and they're doing great.
Yeah.
And for property, I mean, they pay a great revenue dividend, but I still think there could be upside because of growth and shortage of supply of commercial industrial
And
buildings.
going into the weekend, what is worrying you?
Nothing's worrying me.
Paul Theron from Vestac, thank you
Are
so
you
much
crazy?
for joining us. Of course.